And we are live, good sir.
We are live,
Yes,
doing
we
it
are
live
live.
from Melbourne, sunny, beautiful Melbourne here. It's horrendous weather tonight. It's
Yeah,
horrendous. So glad to be indoors and rugged up. Hence the jackets. I probably should have just put on the heating. But hope you're well, everyone. Thank you, and welcome to another Thursday night stream with your friends Tex and Ads. As the name suggests, is it time for BTC gap fills? Well, we've been talking about that a little bit inside the Discord as well. BTC showing some weakness here now, as you might have noticed as well. We got a little bit of a newer sort of stream starting soon intro, and you'll see the way that we're rolling things tonight and moving forward are going to be a little bit different. We want to make things a lot easier for you to follow along. So all of our videos will now have timestamps and indications of what coins we're looking at, and a whole bunch of stuff to make it easier for you guys to follow along. Hope you're well. Welcome yet again. Don't forget, if you do like these videos, please like, comment, and subscribe. You can subscribe to our YouTube channel, Unity Trading Group. Come and follow us on Discord, Twitter, YouTube's. A lot more content coming to YouTube. So this is definitely the place if you want to follow us and get more guides on how we're trading, how we find setups, altcoins, crypto, FX, strategies, tools, indicators like the ones that we have, our professional and pro indicator packs. You can head to unitytradinggroup.com to see all the indicators and tools that we use here to trade at UTG, including Steamroller, Trendbreaker, Unicon, the whole lot for no more than $35 a month. Well worth the investment. So ads, without further ado, let's get into the charts, my friend, and see what's happening.
Give us one sec while we get.
Transition over.
Yes. One momentum. One memento.
Uno momento.
One uno.
Has been an interesting week thus far with trading. A little sort of slow, but the Discord has been going crazy. Art, looking at you, Art. If you are watching this, Dory, Ferg, some great charts this week. It's really been great to see, Art, your evolution of trading with Ichimoku. Brings a little tear to my eye as an Ichimoku trader. So congratulations, mate. That is phenomenal. Ferg's killing it. JB, absolutely on fire over in that FX stocks and stocks channel. My goodness, that boy can chart. Unbelievable.
Absolutely, he can he?
So we're going to have a look at a few pairs tonight. BTCUSD, ETHUSD, FBTC, BTC Dominance, the DXY, and gold as well. As always, if you have coins or things that you'd like us to chart, come to the Discord, unitytradinggroup.com, and you can join us there or on YouTube and let us know what you would like us to chart each week. Ads, let's get into it.
All right, so BTC. No real surprise with the BTC price action, to be completely honest right now. We did have this trend line drawn in from a little while ago, measuring this uptrend that we were seeing from starting from around that 10,700 level. We were walking towards that supply up here at around that 12.3 level. And circling back to Tuesday night this week, where we had, we were talking about the supply and demand levels, that this level at 12.3 was going to be the most, or the highest quality, should I say, demand level that we're finding here on the BTC chart, especially on the daily. So anyway, coming off this, we did see a move back down to our trend, and then smashing through that, giving us that retest that we've been really talking about for the last day or so, and then now back at this level of demand, which is around that 11,250, and off the back of this, I was looking at this resistance level, or 61.8 retrace from the swing high to the swing low, and it's been playing out pretty much flawlessly right now with this area of liquidity at that 6.1 just to the left there. I'm really predicting what I think is going to be a decent level to look out for is 11k tie. That psychological round number, that 11,000, and then it lines up quite nicely with a 4-hour demand zone also.
Yeah, I agree with that. As we said in the Discord, when we had that wick down in our analysis, we said that 11.5 was going to be the hard mark for things to pass by. I've been short since 11.5. I'm happy to stay in this short at the moment because I'm expecting, as we've been saying the last couple of days, sort of like a it could even be a little scam wick, sort of double bottom to that demand zone. And as I said last week, a wise play or a play might be to potentially set bids slightly higher, slightly lower if you're on spot like what I was. I did have a buy set down there which got filled on that wick, and then that was a spot buy, and then have been short since 11.5. So as I said, still short, looking for that demand to be tested. I would not be surprised at all to sort of see that bottom demand zone be touched there at around 10.8, potentially down to as far as 10.6. If we do start getting down towards that level, then my concern will be scan wicks down to that 9.6 CME gap fill. But we keep talking about this gap fill, and I say this every single week. Gaps don't have to fill. The statistical likelihood of a gap filling is 95%, but there's still plenty of gaps much lower that haven't been filled as of yet. That will remain unfilled. So everyone putting the emphasis on the gap fill, that's cool. You are wise to have bids down there. I wouldn't put it to the dollar. I would put it, potentially a few $100 either side if that's maybe the way you want to play. This is not financial advice, but when everybody's looking for an exact zone, that you don't always get those exact zones to be hit. So right now, BTC still showing some weakness, lower highs, lower lows. We're not out of the woods yet in terms of any bull runs or moves above 12.5 at this stage. Say the same thing most weeks. We're still within this range, this sort of 10.5 range, as low as 10.5 up to sort of 12.5. The immediate range that we've had now, 11.2 up towards that 12K zone. So we're still in this range. The sentiment is pretty bearish right now. It's interesting, isn't it, how quick it changes from being full moon boy Lambos up at around 12.3, 12.4 to the world's going to end 3K calls at like $1,000 less than where we were. That's nothing in the sense of this move. But again, as I said, the reaction of alts against BTC falls and how dramatic the market pulls back, it does concern me, despite the lack of BTC dominance that we're seeing at the moment, which is a little bit sort of confusing to me. We're still seeing runs on altcoins and your DeFi projects and dots and stuff like that we're seeing doing amazing things. But I've not been as actively trading alts the last couple of weeks. My emphasis has really just been back on leverage trades with ETH and BTC. And I'm happy for the alts to make a decision when we might see another little sort of mini alt run, as you were saying earlier today, Art. So, yeah, my thoughts align very, very well with ads on that one. That's that demand zone down at around, first of all, I'd be looking at around 11.2 or 11.150. And then from there, we know that when we breach past that first demand zone at that 11.115, the 27 extension looks likely. The 27 extension would look likely. We often see pretty decent bounces from the 27 extension. We might see a 27 extension bounce, run back up to that 11.1 area, and then another fall back down towards potentially that 61 extension if we were going to continue on this little sort of downwards wave pattern that we're on at the moment, making consistent lower lows and lower highs.
I think that's a fair assumption, bro. I really do.
Yeah, so that's it for BTC at the Mo. What about the daily chart, ads? What is the daily chart looking at? We haven't looked at that as much as of yet, mostly sticking to the 4-hour time frames, but looking at this daily time frame at the moment.
If we peel it back and just redo...
Is that the daily? We are looking at the daily there, ads,
That's the 1 day, yeah.
Yep.
If we peel it back and just put in the zones for the daily... the swing becomes quite aggressive, to be honest with you, and there are a number of zones there that I could really identify, but nothing really speaks to me as aggressively as two zones that we've bounced off. If we look at this candle here just to the left, the zone at 11,000 or 11,100, which would be that 11,000 mark on our 4-hour, and preceding that we've got nothing until the gap at 9.6. So if we do come down and start to break below this level here on the daily time frame, it paints a little bit of a better picture for that gap down there at 9.6 if we do get down there.
Yeah, and that's where that 10.5 level will be pretty critical in terms of holding that up. We saw those little wicks to the left there, and then we see that top wick at around the 1st of June, which aligns pretty well with that 10.48, that 10.531 level. So that's going to be a significant level to hold if we are to hold from here. We could very much break through that demand zone at that 11,000 area, and then quite quickly wick down towards that 10.5 area that we saw there on around the 1st of August and the 22nd of July. But break it close above that 10.5, then as Ad said a moment ago, there is not much structure there to the left holding that up from that impulsive daily candle that we saw there. There is very little holding that back to at least sort of 10 to 50, 10K, and then that's why it could be quite a violent, very quick big wick down to, or a couple of quick big daily candles down towards that CME gap. But that's still a little way off yet, in my opinion. You can see very clearly we're in that demand and supply range between 11 and 12.5 at the moment. It's nothing out of the ordinary as of yet. But you can see there, using our custom steamroller indicator as well, that gave us that very overbought condition there on the 14th of August. Steamroller calling it pretty well since that time. So if we were looking at our indicators being our RSI, our CCI, and steamroller, the daily is indicating to us that we still have some downside moves in reserve ads.
Absolutely, I definitely agree. And pending obviously the break or the snap of this demand zone and this liquidity just here on the left, which is not a whole lot, to be honest with you, at 11K. There's not a whole lot of liquidity there. We have cleared a lot of it out, to be honest. If we circle back to the 4-hour chart that I was just looking at before, we have cleared a lot of this area out now. So there's a clear run down to that 11,000, and we might get held up there for a little while, like Ty described. Around that 11,000, we might bounce between 11.1, 11.2. Before ultimately making a decision whether we're going to stay in this range or continue down, towards that 10.3, 10.250 level. So yeah.
And one thing that was notable as well on the BTC chart on Tuesday, if we go and open up our crypto Unimoku settings, Unimoku is our custom Ichimoku indicator that has 4 different settings that you can set alerts for. We did say on Tuesday night on the crypto settings, there was that bearish Kumo twist, which is indicated there by that red cloud change. We'll have an update. You can go to unitytradinggroup.com/Ichimoku if you want to learn more about that, but we'll be releasing an updated version of our Ichimoku guide in the next week or so as well. And we highlighted that on Tuesday and said, hey, listen, there's something here that Ichimoku is telling us that our trend is becoming bearish. And that was just before we had that rejection off that trend line. So still in a bearish scenario. We can see the rejection off that 11.5 level, which was the bottom of that Kumo as well. So don't discount the benefit of having all these different tools at your disposal. If you are a supply and demand trader, like what we showed you on Tuesday night, it very, very well complements things like Unimoku, EMA fans, Trend Breaker, and your Fibonacci as well.
Absolutely, and the looking like that 200-day EMA on the 4-hour, if I'm not wrong.
That's right, yeah, the red thing. Yeah, our EMA fan there, the 200 often acting as good levels of support. We can see those sort of flash wicks there, but you can see the 50 and the 100 EMA are now starting to converge and looking like they're going to have a bearish cross as well. So again, showing us that 11.5 level and that demand zone at that 200 MA may end up being our range for a little bit of time. But I think that's enough on BTC ads. Let's get into FU, or actually, let's have a look at the BTC dominance before we dive into to FUSD.
BTC dominance, you reckon?
BTC dominance. We're kind of just sort of trending at the minute, aren't we? We're not really doing anything too dramatic.
That candle there 2 days ago that we had there, that flash up to 64%.
That's the daily chart, is it?
That's the daily.
Yeah.
I haven't looked at it since we looked at it on Tuesday night, so that's interesting. But we did, which is weird because it closed here, but we opened back up at 61, whether or not it's a glitch or not, with the calculation by TradingView, because this is the calculation chart That's the only way you can look at BTC dominance on here. That's interesting. But anyway, we are
Similar
still...
sort of formation, I guess, if you were to discount that potential glitch that we saw there around the 22nd of July, where we had that quite large impulsive BTC dominance candle, and then just sort of continued to float back down on the 22nd of July.
Yeah, I reckon that's the same sort of glitch. Anyway, moving on with this trend line, we are still in that declining stage. Honestly, in the last 2 days since we've had that wild candle or that glitch on the 25th of August, if someone in the chat knows if it's a glitch or not, just leave a comment. However, we are just moving to the right, pending some BTC moves. We are trending quite closely towards that trend line. However, honestly, the main level of interest would be the 59% level on the BTC dominance chart on the daily. Honestly, that was a very, very hard level to find just there on the left-hand side. It's not a fantastic level. It is a crap level of supply. It's not of high quality. It is low quality. At that, we can obviously see our pivot point down here at the 57% level, and that's the highest quality. So whether or not we end up down there would be good for the alts. However, BTC would be kind of stagnant or moving, just moving slowly to the right for the next little bit if that were to be the case at that 57.958 level for the dominance chart. Perfect. All right, do you want to have a look at ETHUSD?
Indeed, we do. ETHUSD. Let's have a look.
ETHUSD. So, ETHUSD, I've been charting this on the 4-hour, and I think we drew this sort of structure in on Tuesday night, where we were just, creating a channel, a downward sloping channel towards this level of demand at 367, which would be a decent level to really have a look at on the 4-hour. However, we have made some ground through this on with these wicks here on the 12th of August and the 8th of August, as well as the 12th as well, so twice on that same day. Whether or not that makes a difference with the strength of this level at this 370, if it pulls back down to even that 330 level mark, would be an interesting play also if we zoom out to the daily when the chart loads. This level here is just a pause in the market, so it is low quality also. There is no high quality zones on the daily time frame for ETH until $240, and that would be an interesting play, I think, in the longer term time frame. Whether or not we get down there, what are your thoughts, Tyler? I'm not sure if I could see it back down at the 250 level at the within this space. How the market's moving towards these DeFi and bits and pieces like that.
Yeah, I would agree with that. I don't think that we're due for 250 moves at this stage. I think, but I think both BTC and ETH are in this new realm of another phase of the market at the moment. Hence the reason why I don't see BTC back down at least for a continued amount of time, back down towards that 9.6 or back down towards that sort of 8.7K mark. I think we've breached past that. I think the market cap now, and looking at the bullish sentiment and the investors and the players in this space, has warranted BTC and ETH to be in this new realm of potential price discovery within the next 12 or so months. I don't think we'll get up to sort of that 20K BTC anytime soon, in my opinion. As we've sort of said, this very much could be establishing a range now between sort of $440 and say $340, counting in some of those sort of scam wicks. Like Ad says, that is quite a low supply, low quality demand rather, at around that 320 level, because it is a pause in the market. It's not a significant pivot within the market, as we would have seen up around that 440 mark or that 460 mark, which is a much higher quality level of supply. So at this stage, yeah, we're still making lower lows, we're still making lower highs with ETH. So I'm expecting us to come back down and sort of retest that 373, that 365 mark. I am still buying ETH and BTC on the way down. So regardless of any leverage positions that I'm in or any positions I'm in full stop, I'm still actively purchasing on the way down. I think for myself, that suits my trade strategy. So you might do your own thing, but for where I feel ETH in particular against BTC is going for the remainder of the year and for the next sort of 12 to 18 months, ETH is my play at the moment. You can see there Fibonacci's and that demand zone being respected really, really well. So it seems likely that we might find at least a temporary bounce there. But similar to BTC, if we do break below that demand at around 360, there is not a great deal holding that back up to around that sort of 345 level, where we might see a pause and then again back down towards 310. As I said on Tuesday night, my assumption of us going back up towards that 420 mark was completely and utterly wrong. So I took the L on that, as I've taken the L a couple of times on some alts this week. So that was pretty humbling. Talking to Zoran Cole a few months ago, which you can find over at unitytradinggroup.com/podcast. We were talking about his $1 million ETH trade that he did and some of his daily habits and routines and things that he puts into his trading strategy that I think you would really love if you listened to it. He said the statistical likelihood of you making losses becomes exponentially greater with every single winning trade that you make. And while I've been on a little bit of a run, I got hit a couple of times last week with some alt. So that was humbling. I took those losses with some appreciation because it made me sort of step back a little bit and just reassess what I'm doing and how I'm doing it. And I was grateful for those losses. So again, with ETH, this is just my thought at the moment. Even looking at our indicators, there's not much going on there. Like on the 50 RSI is going to be the sort of local level of resistance from an RSI standpoint. Steamroller has yet to sort of breach back in towards that white or that grey parallel channel that we can see that is respected quite heavily there. On the daily, a little more clearer, we're getting 50 support on the RSI, where we typically tend to find support or resistance dependent on what side we are above. So yeah, that would correlate to me that we are looking likely for at least a temporary bounce around that demand zone. And don't forget, if you didn't get a chance to see us on Tuesday night, where Ads beautifully went through that supply and demand masterclass with you, you can watch that over at the Unity Trading Group YouTube, and we also posted it inside Discord as well. Ads, if you got any more thoughts on that one, or should we get into some of the reg markets?
Yeah, we'll get into some of the reg stuff. I think that's all we wanted to chat about in terms of BTC Ethereum.
In terms of alts that I'm looking at this week, I've been actively posting inside Discord. ZIL BTC is one that I'm watching at the moment, and BNB BTC. ZIL BTC, funnily enough, on the 4-hour, making a very similar structure to BNB BTC. BNB BTC is in a bit of a triangle formation at the moment. We've just had a very quick retest of the diagonal trend line. So if you are interested in seeing what I'm seeing at the moment with the minimal alts that I'm trading right now, you can head over to the Discord and jump into the UTG charts channel.
Perfect, bro. All right, with the DXY, obviously it's a regulated market. We're not financial advisors. You have to sort your own financial advice that's tailored independently for you. This is just trading ideas and strategies. So looking at the DXY at the moment, it's done a little bit. It's done a little differently to what I thought it was going to do. Initially, we did have a pivot point form at around this 92.40 level, and we retested that supply, and we did break through it as well. So if we look at the structure here, it looked okay. However, preceding that, we didn't have the steam to push through and back up above 93.4, unfortunately. It still could be a thing, or it still could be a possibility that we do and head up to that 93.80 supply level again. However, we've just fallen over in terms of volume. This market structure that I'm seeing right now, honestly, being that descending channel if we look at it on a smaller time frame, for example. But we're just got no volume in terms of the DXY. That's immediately apparent when we look at the candle structure and the lack of movement. Obviously, it's been bleeding down. If we draw our fibs, however, off the swing low to high, we have bounced off the 50, which honestly, there's a significant amount of liquidity to the left-hand side of the 50 here, from early August and late July. So it could be an interesting next couple of days or remainder of the week, honestly, tonight and tomorrow night for the American sessions, if we do continue upwards. If those other major pairs like Euro and AUD and Canadian, everything like that, push down towards a lower value and push this DXY up. So it's going to be a nice couple of days. We'll see if we do get that push through supply and then up to the next one, Ty. I think it's something that I'm not entirely confident about right now, just seeing the structure and this lack of follow-up after late last week. This week we just haven't had that steam or those legs to push through. So it's going to be interesting to see whether we break this 38.23 and continue up, or do what it looks like it's going to do and head back down to that 6.1 and potentially retest that 92.40. I think holding on to some of your dollars there and is going to be a decent idea just to see where this goes. Yeah.
All right, let's have a look at gold ads. What is gold doing?
Gold, wrong one. Gold has been doing very similar. If we have a look at this, structure that we've been forming this descending channel, and only yesterday we decided to break out of this descending structure. So the next play for gold, could be something along the lines of a retest of that, small downward sloping trend line and towards that higher Fibonacci target, which have been drawn in for quite some time now, or even that 2000 level, that psychological round number for gold, back up to those levels from 1950. Not a whole. What I was going to say, it's not far away. Should I say that? But something along the lines of this may be a play for gold if we can break through some of this liquidity just here to the left, which I'm looking at just here and here. So for gold, if you want to play this, obviously this isn't financial advice, just my idea. However, we could have that retest and some movements to the upside for gold. In the short term, I'm talking low time frame scale at the moment with the 4 hour.
Yeah, and just quickly as well, for a lot of people that are trading crypto, we've spoken about this during our Forex masterclass, and you see ads and I talk. You might go, well, Unity Trading Group is a crypto based thing. Well, no, we're not. We trade cryptocurrency and Forex. If you struggle in crypto and the TA is not respected, or you want something that I guess it's certainly not easy by any stretch of the imagination, but looking for somewhere where you can maybe refine your TA in an environment that is not as irrational and volatile, at least on the higher time frames across most markets, like what you would find on crypto. Forex is a really great way to sort of cut your teeth a little bit. Jump over to the FX charts at forex.com on the trading view tickers and just have a little bit of a play. Understand how the global macro market works in terms of TA, because I think we get too laser focused into crypto sometimes, and we realize, or we don't realize, that there certainly still is quite a correlation between the SP 500 and cryptocurrency, and understanding what's going on in the Forex markets, or it might be ASX for you, or whatever it is for you. Don't be afraid to step outside cryptocurrency and just trade other markets. Trade it, TA it, and walk away for a month, and then come back and check on it a little bit later on, because there is endless opportunity in whether it be gold, silver, Forex, whatever it is outside of cryptocurrency that you are probably missing out on. And like Ads and I say, this is not financial advice. We're just a couple of mugs that like to trade fancy coins and things on the internet. But at the same time, there is a wealth of opportunity that a lot of our guys are now starting to understand by coming over and being educated by ourselves when it comes to Forex. So just wanted to throw that in there. But the beauty of this is that this is something that you could TA now and probably come back in 3-4 months, and the TA is still being respected with exactly what you've drawn a lot of the time, particularly using supply and demand. Ads has a CBA chart that had demand or supply drawn in from like 2 years ago or something. Ads, I think it was, which is just crazy. That is like it's still respected to this day. So, long story short. Play in Forex, play in gold, play in silver, play in the SPX, all that sort of stuff. Wet your feet in many markets, because I think it will make you a better trader for it.
Absolutely. Just taking in a lot of price action and understanding how the market trends in terms of the reg stuff compared to stuff that you're probably used to already, like crypto. Crypto is quite irrational, like Ty did say, and this really does respect TA quite well. And honestly, for gold in particular, there was no data. There was no data, above the 1700, 1800 level. But using the pivots and using some of the tools that we have at our disposal, we were able to see where gold was going to go. So this TA is wildly respected in the grand scheme of things on the high time frame at least. So it would be a fantastic way to cut your teeth and even test some of the stuff you've learnt in crypto and use it on some of these reg stuff and lo and behold for yourself. But anyway, the last one we'll have a look at is silver.
Yeah.
So silver, honestly, doing very, very much the same, Ty. If I had to draw in the same sort of pattern there for the guys. That's more of a falling wedge type pattern than a channel. However, we did get the same result. We did smash out of there, and it's probably unlikely to see it come all the way back down here and then retest. More than likely, we'll have some sort of sideways consolidation before coming up and retesting that 28.25 level on silver. If I had to say something about this, Steamroller obviously agrees with me. Just before we had that breakout, we were getting close to the bottom, relatively close to the bottom, with some oversold conditions there with Steamroller. So a fantastic tool just to use on the reg stuff as it is crypto. But yeah, that's all I really wanted to really mention on gold and silver. They were forming these channels. We had that breakout, and more than likely will continue towards the upside, towards that 28.3 for silver. This all depends on those movements with the DXY. If the DXY starts to fall over and we start heading back down towards that level of demand we spoke about earlier, more than likely these will play out as I am suggesting. But time will tell over tonight and tomorrow night time.
Absolutely. Well, that's it. That wraps up another Thursday night edition of the UTG Trade Market Scan. Thank you so much for joining us. We really do appreciate every single one of you, however many there is watching this right now. But don't forget, head over unitytradinggroup.com, come into the Discord, have a look at all the indicators that we use, premium, professional, the whole gamut is found over there at UTG, along with a ton of educational guides. It's not just Discords and indicators. We put a lot of time, love, blood, sweat, and tears into that website and those guides. So please do make the most of it. And we'll see you on Tuesday night.
Catch you then.
See you guys. Bye-bye.